Hello, hello.
What's up?
Welcome to another episode.
Happy Wednesday.
BitcoinCenter on Wednesday instead of Tuesday.
Live stream number 21, one day late. I was a little out of it yesterday, but we're back on. So I can't wait to get into this. Brought to you by Byte Federal. Go bank yourself. Point of sale.
ATMs, wallets.
ATMs. And get that stuff into self-custody. But yeah, it's been another week. How you been?
I've been good. It's been a little, September, man. It's just September. I don't know what to say.
I like the glasses and the buttoned-up shirt look. I like this little zipper thing here.
Zipper thing. Oh, okay.
That's kind of unique.
Yeah, that's good. And Cedric, I like your new shirt too. There, big guy.
Yeah, well,
that's live in Cedric's store.
This is my creation. Yeah, it's on the Bitcoin Matrix store.
That's right.
Yeah, the BitcoinMatrixStore.com. Store.thebitcoinmatrix.
Let's get going, man.
Let's do it. All right, BitcoinCenter, episode number 21, brought to you by Byte Federal. Go bank yourself.
Let's be real, right? Praising Telegram for launching a Bitcoin wallet. I've always felt like with Haley,
Bitcoin, this digital currency that's out there that people say, oh, it might be the next big thing. What do you think?
I think it's rat poison.
Bitcoins. You never heard of them a few weeks ago? Now everybody's talking about them, but is it a currency?
I don't know. Or is it more like a stock? Or is it a tulip bulb?
Or is it
to debate that?
Stupid.
To me, it smells like Ponzi scheme and the greater fool theory right
you do like 5 minutes of freaking research.
It was me.
Oh, man, I was getting that wrong. All right. Bitcoin's recent rally.
Do you agree? Is crypto finally dead? Go to the next one.
Matter of fact, they're kind of in the Ethernet. What are they? There's some rumors that it's this Japanese guy, but others say no, that he's a fake name. It was a pseudonym. I mean, you're literally putting real money onto a system that we don't even know who created it.
People come to a bad ending.
Is this the most exciting bull run ever?
Not for me. No, it's not.
Welcome to BitcoinCenter, the fast-paced show where the debate is the story.
All right, topic one, the flush. The Fed cut triggers a BTC leverage flush. With Bitcoin's exchange supply ratio plunging and futures leverage wiped out post-Fed cut, is spot demand quietly taking over the driver's seat?
This was strange to me. No, I don't think spot demand is quietly taking over the driver's seat. I think it's not maybe in the driver's seat. But what I found out, this was confounding. Why did Bitcoin's exchange supply ratio fall, showing fewer coins available for trading on Binance when the Fed cut rate? Or why would the perpetual open interest drop 395,000 BTC to 378,000 BTC after the Fed's rate decision? I'm not a trader and I'm not into the data. I thought that would be somewhat bullish. Maybe it wasn't bullish enough. And then, you hear this in analyst track 116K and 113K as key levels as Bitcoin consolidates. And we are at what, 113,000 or 12 below this. So this kind of, and I don't feel like that means we're crashing. So there wasn't a lot of signal here.
No, this is the market seems to be driven right now by options traders. Yeah. And anyone playing the derivatives markets. And until we get to a consolidation point where a breakout one way or the other creates an extensive amount of volatility, we're going to be kind of directionless.
Do you if there's going to be sort of a big Q4 that everyone sort of planned on or, thought or, prognosticated for, do you think there's going to need a spark for something like that to happen? Would it need like, an Amazon to say we're going to accept payments in Bitcoin or crypto?
No, I think there's so much of what's happening right now in the markets, and the reason why Bitcoin goes on these sideways channels for so long is because people accumulating Bitcoin are using options and derivatives to create or to generate more Bitcoin that they're able to acquire at a better rate. So you get these put call placements all around the edges of this market in order to extract yield, acquire more Bitcoin at a better price, et cetera, et cetera. And until that gets to an inflection point, then it'll break out and move violently in one way or the other. But I don't think that, you know, you like, I don't think we see like fat finger buying anymore, right? People are tactically and strategically buying. So they're going to use these processes. So you don't get that retail craziness like we got in the early days.
Yeah, maybe not. We'll see. Let's get onto this next one. Jack Mahler.
See the price of Bitcoin heading?
Higher.
How much higher?
A lot higher. My general framework from the highest level is human beings collectively, we own about $900 trillion worth of stuff. That's equities, the things behind us, real estate, precious metals, fine art, all of the things that we own. Half of that we're using as a savings account. We're owning the portfolio of companies or the art or the house to actually try and persist wealth into the future. I think Bitcoin's going after that market. It's going after a market of $400 to $500 trillion worth, and right now it's $2.5 trillion. So I think in purchasing power terms, Bitcoin can go up 100 to 200 times more from here.
All right, so we know Bitcoin obviously is the...
Well, that's more the moon math. I mean, what kind of time frame do you think?
Yeah, I think that's the only thing that's missing from that, right? That and also I think the other thing that's missing from that analysis is the CAGR of Bitcoin, as that drives into becoming a more of a low volatility, lower return asset into the future. Then people are going to start to compare investing in Bitcoin to other assets, right? Right now, as a top performing global asset, it's hard to beat Bitcoin. In the future, if the CAGR is 20%, there may be a handful of stocks out there that do a lot better than Bitcoin. And therefore,
I think there's only one this year. You know, the stock that's outdoing Bitcoin right now, Build-A-Bear, is up 120% this year. The sales are only up 12%.
We should get a Build-A-Bear meme ETF.
Talk about sort of like the reincarnation of Tulip Mania.
Right.
Let's go on to the next one here.
All right.
How would you advise me to address that question bang on so that it's a no-brainer?
Yeah, I think the answer is the Treasury company is sitting on a mountain of hard assets. In a rational market, it'll just sell the equity to pay the dividend. In an irrational market where the equity decouples from the Bitcoin fundamentals, you're going to sell the Bitcoin volatility, or you're going to engage in derivatives trading in order to extract the yield directly from the Bitcoin. If necessary, you're probably going to sell a future, right? You're going to sell an out-of-the-money call option against the Bitcoin, or you're going to enter into a basis trade. And in the worst case, you're just going to sell the underlying Bitcoin itself, because as long as Bitcoin is growing at a multiple of the underlying dividend, you always have that as a final option.
Well, that really kind of closes the loop on our conversation with Dan and Darkside. So the question becomes, and this is, by the way, at the Bitcoin Unconference, Saylor floated this as a worst case scenario to sell calls, warrants, or even some BTC to fund obligations. Is he responding to the pressure on Twitter that Dan and Darkside were suggesting?
Well, I mean, I think what he's responding to probably the pressure on the price and MNAV. And I guess, yeah, he's definitely in tune with what's happened. I think he somewhere said, like, he'll be digging into these comments on X, and he'll find, you know, an account with 300 followers, and he'll be like, this is a bot. Like, I'm here trying to figure out why a bot is saying this negative commentary about my company. Okay. He thinks there's, you know, sort of bot armies that are, you know, maybe, and I think there's validity. There are definitely bot armies on X, you know, swaying opinion on lots of matters. So yeah, but
it's interesting. Why has he not ever said anything like that before?
I mean, well, maybe
it's
about
the timing of this.
I think it's really about selling the Bitcoin. Maybe the last thing he said.
Last thing he said.
Right.
But also, like, selling derivatives or
well, that he needs a trading arm. They need a separate trading entity.
That's not ever been said before either.
Right. And that's the thread that has to be pulled there.
Yeah.
And they need a trading company.
More like where a lot of us have imagined that they become like the Goldman Sachs of Bitcoin.
Right. They manage the flows in the market.
Right.
And they benefit from that as the largest holder. And
it's the first time I've ever heard them talk about that kind of stuff.
But that really what that boils down to is they're going to have to sell some Bitcoin to carry the trade.
Yeah.
I think that's how I see that.
They go there. I think they become really.
But he's also saying, you know, if the market's acting irrational. So we'll see what the definition of irrational is in this MNAV battle. Let's get on to the next one here. Bitcoin mining hits new difficulty peak. Our record difficulty and surging hash rate signs of unstoppable network security.
Yes.
Okay.
Hash wars are good. The thing that I think people are worried about with the centralization of mining, bigger entities, but at the same time, yes, there might be bigger entities coming into mining, but we're getting decentralization through nation state participation, right? We're starting to see not only big corporate miners, but nation state miners that are not necessarily friends and united globally. So this is the hash war that we had talked about for many years. And this is kind of what Jason Lowry had predicted, what Max Kaiser's been predicting for many years. As hash rate increases and it drives to entities that have the resources and the free energy or cheap energy to mine efficiently, we're going to get diversification into bigger and bigger mining operations.
If someone had free or cheap energy to mine a substantial amount of the newly issued Bitcoin per day, would that be like that? Wouldn't be enough though to move markets if they sold that at,
I guess
less than.
That's a good point, because I probably should have said this, but a lot of the hash wars are securing your ability to transact on the network.
Right, for block space.
Right. If you're XYZ country and you're worried about being sanctioned by the US, you might want to have a significant position of mining and control of resources on the Bitcoin network so that you could transact with Bitcoin globally where no one could censor you.
Right.
Right.
Yep. All right.
All right. Eric, are you there? Let's bring him on. There he is. This is the man of the hour, and this is such an exciting topic. Tether, onshore versus offshore Tether. This is, what do you think about this splitting Tether into a U.S. compliant and offshore version? What do you think this means for Bitcoin?
I think he's on mute.
Oh, you're muted, buddy.
My bad. Can you hear me now?
Gotcha.
Yeah, so for context, earlier this year, my venture firm, we put out this report on when everybody was talking about, okay, so banks are coming to Bitcoin. The Trump administration repealed this key regulation, SAB 121, and that makes it much easier for banks to now adopt digital assets in general. And we're like, what does that mean? How do we steelman that? We did a whole deep dive with the CTO of Silvergate going into, here's what bank adoption for Bitcoin looks like. And a huge part of that question has been stablecoins. So we spent a lot of time kind of thinking really prospectively about what it means when stablecoins are coming into the banking system and how Bitcoin's ultimately going to be tied in to that form of adoption. So Tether being, far and away the most dominant, the decisions that they're making today are setting the precedent for what's going to be happening over the next 5 to 10 years with whether other stablecoin issuers do, et cetera. And yeah, so I think one of the key ideas that we came to is that when the Genius Act was passed in August this summer, that set a pretty hard line in the sand for, in the US, if you are issuing a stablecoin or if you're a financial institution participating with stablecoins, then you need to be dealing with stablecoins that are following the Genius Act's compliance. And that the two primary things that it did was it said stablecoins can only use short duration government agency liabilities. So treasuries and other agency debt. Those are the only things that they can use as reserves. And they're not allowed to use anything else. And then the other key regulation that was put in place is that stable coins are not allowed to pay interest on the stable coin unless they have a US bank charter. And that was just like regulatory ring fencing to effectively, allow banks to still remain competitive within the market. There's this letter that was produced by the Community Banking Association that was sent to the agency passing the Genius Act and saying, look, like you guys can't allow stable coins to be paying interest. Otherwise, we're not gonna be able to compete. And the reason for that is there's so much intermediation that goes into the banking system from the point at which treasuries are created to the point at which prime brokers buy them. And then the Federal Reserve recapitalizes the debt into reserves within the system. And then ultimately the commercial banks are leveraging those reserves at the Fed through master accounts to lend within the system and create more money. And then banks who don't have master accounts have to link up to a bank that does have a master account. So there's all these steps in that path to the creation of money. And it's highly inefficient. And all Bitcoiners know all the problems with this. What stablecoins did is they took debt from the government and immediately issued it into a form of money. And it just like disintermediated all these different steps within our banking system. And that's what's really scaring banks right now. So with that context, Tether had to create a US compliant stablecoin, the USAF. And that was one of the key ideas that we were speculating on the report, saying what Tether does is going to be a big decision here. Are they going to bring international Tether fully into compliance? Are they going to create something domestically? Or are they just going to move completely offshore? And it looks like they're kind of splitting between two different products. So that's kind of created and delineated this line in the sand of there's probably going to be an onshore US denominated debt stablecoin market. And then there's going to be the rest of the world and whatever regulations exist within the rest of the world. So this offshore market's really interesting. And what we find, how this all like relates to Bitcoin is that Tether today, 5% of the reserves that are backing Tether are in Bitcoin. And that's something that's going to exist in the offshore market. And now when we think about that, we think, well, how are stablecoins going to be competing over time? When we have a much more like open and free market for competition of these, they're going to start competing and have been slightly competing on paying some degree of interest. It's not like an industry standard yet, but sooner or later, Tether is one of the most profitable companies in the world. And sooner or later, they're going to have to pass along that margin to the consumers that are using it. And when we start to see like this international market of competition among stablecoins where they're paying out interest, the question becomes, what reserves are going to be the most competitive reserves for allowing you to pay interest in the safest manner and maintaining stability of the asset over time? And so we already have precedent where Tether's been doing this at a 5% reserve ratio in Bitcoin. And then you can tie this in with what Saylor has recently done with the stretch MicroStrategy, preferred equity. And having a fully collateralized, effectively, not like within the terms of banking, but nonetheless having taking the economics of Bitcoin and using that to pay a fixed interest rate on short duration, a short duration product that's effectively acting like a form of liability. That those economics are kind of like the proto version that we see that'll eventually emerge within the stablecoin market for reserves, where those that have an asset that is producing a greater amount of capital return over time are going to be in a more competitive position to pay more competitive rates of interest against those that do not have that in reserves. And that was one of our predictions in this report. We're just like, there's going to be a market of adoption of Bitcoin into the reserves of stable coins over time. And I think, it depends on the time horizon and, a ton of other variables, but we think that reserve ratio is going to start to expand gradually. That's going to bring the price of Bitcoin up. Bitcoin is going to become more stable. And we'll start to see it become easier and easier to have Bitcoin as a reserve as it becomes less volatile with scale. So that was kind of like the big idea that we were pulling out of a lot of this.
So like this whole idea of offshore Tether and offshore Tether reserving better purchasing power than onshore Tether over time, how would that impact the global economy? That to me seems like the Eurodollar system on steroids.
Yeah. That's kind of an interesting way of putting it. It's like, it's comparable, right? You'd expect to see capital flight. People are going to want to find more productive forms of capital. They're going to want to offshore assets as they have, and they're going to want to find the best means of accessing that capital. And I think, you can make a strong argument that US denominated stablecoin market's not going to be very competitive at an international level when they're forcing collateral to be these things. And like, I think probably an interesting point of like historical precedent for it would be when we think about the wildcat banking system within the US. And a lot of people will refer to that system as like the 19th century banking system in between the central bank that occurred and ended subsequent to the Federal Reserve being created. There was this, period of, I think like 80-ish years when we had like effectively this wildcat banking system, and it was allowing banks to issue money off their own reserves. The definition of free banking is kind of that. Systems that were based on gold reserves where banks would issue their own notes and people would use these notes as money, and, banks would compete in the market to have the best notes that people demand. The wildcat system wasn't very free though. And it's not a good example of free banking because the, ability to do so was done on a state-by-state basis. And each state was issuing all these different laws that were, constraining the free market of the system. And like, in order for a free banking system to actually work, in order for banks to, properly regulate the market and to respond to free market incentives, you can't have a ton of, various statewide influence over the reserves you could be using. So they had things like bond collateral laws where states were forcing these wildcat banks to not use gold and to use, their state debt in some way, shape, or form as a form of reserve in the system. And that fucked up the incentives of the system. And like, that was kind of like the main takeaway of the wildcat, is that like when you intervene, like a free banking system, what's challenging with them is that they kind of have to exist in a vacuum. The second you start having these competitive dynamics where you are starting to influence the market incentives and control the reserves in the system, that's when banks go bankrupt for reasons that they shouldn't. And you start to get problems. So what I would expect is that if stablecoins become like, today they're kind of this narrow banking technology, but conceptually the idea of taking, a cryptographic signature, a token, and having it represent value backed by some form of reserve, then that conceptually can emerge as like in an offshore, more like free banking type market. It depends on, there's a million variables of how other governments are going to respond to a lot more stuff. But nonetheless, the U.S. is not going to be in a competitive position when they're going to be putting, forcing U.S. debt as the only reserve asset. And then banks are going to be able to pay interest, and they're going to have these things called, in the U.S., they're going to, like, the new term for CBDCs is going to be tokenized reserve deposits. That's going to be like the new wholesale CBDC, and then tokenized deposit, that's going to be like the new retail CBDC. And we already see that, right? Like JP Morgan launched a tokenized deposit, the tokenized deposit in like a beta program on the Base blockchain through Coinbase. And, it's like a stablecoin that's paying interest effectively.
Yeah. So you'll take your USAT, send it to Wells Fargo, and it'll go into an account that'll pay you interest.
Right. Yeah. And like, you can buy these things on basis tokens, and they're like actually paying out a degree of interest. I'm not sure what the mechanics are on the back end for how it's getting paid out. I'm assuming directly through some form of their stable coin. But yeah, I think the idea is that what that kind of means is that like Tether's probably going to get a bank license in the US, and then they'll probably be paying on the USAF token some form of interest, or they're going to issue like a new one that's effectively going to be like a money market account.
Yeah, I think a tokenized money market fund.
The second order effect of this play is they want to run USAT on Tether's Hadron technology platform to bring real world assets to the Tether network, treasuries, bonds, things of this nature on top, and then. So I think but I want to know, do you think that this is they have brought in Bo Hines, so they have sort of kind of regulatory capture. This is going to be more compliant with U.S. regulation, so they have a nice moat around compliance, and they have Anchorage. Who is it? Anchorage, who's going to be the issuer. So I wonder who the issuer is in the international Tether, and do you think that the USAT is going to outcompete Circle and become the number one stablecoin in the U.S.?
That's an interesting question. Yeah. I don't have a strong opinion on it. I think that with all these things, these markets are very infant. So I think although they're still large, the market sizes are very large. And because they're still in their infancy, what people might perceive to be like an entrenchment or a network effect around some of the assets, we might be surprised that because we're so early that wasn't that significant of a network effect. Given, for all the points that you just described, I could definitely see Tether, overtaking Circle at some point.
What about in terms of social credit scores? Do you think one of these coins is more likely to have more draconian measures? That being the international USAT versus USDT versus USAT?
I think if we look at the behavior of some of them and, the alignment of the organizations, that you'd probably expect Circle to be, pushing more for that angle of compliance. But at the end of the day, I'd assume that they start to become pretty commoditized amongst each other about how they're all, structured in a similar manner.
I'm curious, did you see, or have you heard Luke Groman talk about the potential of in the next big recession that in order for the Eurodollar entities to start to receive FX swaps, that they get forced into dollar stablecoins?
Oh, that's interesting. No, I didn't.
Yeah, there was a really interesting take in regards to how it might force adoption in the next recession.
Mm-hmm. Mm-hmm.
And
that, yeah, go ahead.
No, I mean, it just hit me like a ton of bricks when he said that. I was like, holy smokes, because this, you could then start to view these stable coins as a runaround from the Fed, right? Is that like you're just going directly to companies and countries in need of an FX swap, and you're going directly straight from the treasury through a stable coin right to them. And I'm wondering, like, if you think that's just to put more pressure on the Fed to get more political control of the Fed, or do you think there's a real strategy there to try and eliminate the Fed long term?
I don't know about a strategy to eliminate the Fed long term, but I view it certainly as a new form of distribution that's circumventing it. So then the question kind of becomes, if we do start to see stable coins providing dollar liquidity outside of, the banking system towards, these international financial institutions, then, that's something where you would probably see pressure come down on the stablecoin providers. Because the thing about like treasury auctions is that you have to meet all these requirements if you want to acquire treasuries at scale. Like there's like Treasury Direct that retail users with, small amounts of money can go buy treasuries directly on. But if you want to do this in mass, then you need to be licensed within the US. So, they are arm's length from being able to distribute that dollar liquidity, because they can choke off their access to treasuries if they don't like what they're doing and they want to force it back to the system.
Interesting.
This has been awesome. Thank you so much for coming on the show and breaking this down for us.
By the way,
yeah, of course,
if any of our listeners have not read Eric's most recent piece, go to X and download it. It's fire.
Thanks,
Eric,
guys.
tell them where to get it, buddy.
Yeah. Go to our website. It's epochvc.io. And if you go into our writings, you'll see it. It's kind of like the one at the top. It's the most recent, but it's a whole deep dive on everything you would possibly want to know about how banks are going to specifically be adopting Bitcoin. And then we get into a lot of the discussion around stablecoins that we were just talking about.
I never miss anything you write. It's so well written and so well researched. I love it. So I recommend everybody go take a peek.
You going to be at Canadian Bitcoin conference?
They didn't invite me. Tell them to invite me.
All right. I'll let them know.
Okay.
Go Canada. Thanks for coming on, bro.
Thanks, Eric.
Thanks, guys. Later.
Bye-bye.
This is BitcoinCenter, episode 21, brought to you by Byte Federal. Go bank yourself. Hit like and subscribe. Go bank yourself. Use Byte Federal's ATM and point of sale and crypto wallet.
You got it.
Let's head to the lightning round.
Let's do it.
All right. All I'm going to say is Kevin Durant. What the hell happened here?
I don't know. His agent said, "Oh, he found his keys." So
he found
his Bitcoin that he had bought like at $650 a coin, and but lost his keys, and now he's recovered them. He's got access to his wallet after all these years. I think this is probably his agent going, "You did what? You bought Bitcoin?
Can you just call the toll-free number?
You can't tell people you own Bitcoin."
Right, but like
now
this is not a Bitcoin issue or even a crypto issue.
Now it's okay. I think this means now it's okay for you, Kevin, to be able to tell the world that you own Bitcoin. It's cool now.
Right. Okay, that was weird.
I think this whole I lost my keys in a basketball accident is bullshit. But that's my this is not news, but good for you for finding your keys, Kevin.
Open invite.
Oh yeah, CZ. So Sheng Penzhao, CZ, otherwise known as CZ, boosts his stake in Athena Labs, issuer of the USDE stablecoin, which is an algorithmic stablecoin, not backed by treasuries. Is this a sign of DeFi's rise, or is he just hedging as TradFi warms up to regulated stablecoins?
I mean, to be honest, I think this is a sign of DeFi's rise. I mean, I think all the regulatory environments getting paid for stable coins. And I think they want to put a lot of things on stable coin protocols or platforms or these databases and move assets around. So CZ has always been a really interesting guy. He's not in jail.
That's
the look,
he's got that going for him.
The stablecoin market, U.S. Treasuries estimated in April that the $295 billion market would boom to $2 trillion by 2028. And everyone wants, so he's going where the puck is going. And
it's also interesting if you think about this from the terms of like what Russia just said about the Genius Act and what the United States is planning to do with stablecoins. Here's this offshore entity that's one of the largest crypto/DeFi players in the world saying, hey, you know what? There's a stable coin that's not,
they're like the number
backed
third
by treasuries. You can't get rugged. You can't get shut off.
They are backed by short-term treasuries.
I thought it was completely algorithmic.
No, there's short-term treasuries involved in the algorithm of probably buying and selling and supporting the thing. I'll find that exact quote in a second. I just saw it. But his company YZI manages $10 billion worth of assets spread across the crypto, AI, and healthcare. He's kind of like this perpetual, I don't know if you want to call him grifter or like sort of entrepreneur in the space. I happen to think he's probably a pawn of China with how far this has gone. It seemed like he brought down FTX in a tweet.
Yeah, that's true.
He can move markets. He's
For
still
sure.
The investors in this. Athena has also won investment support from trillion-dollar asset manager firms Fidelity and Franklin Templeton. So everyone's trying to get in on this stable coin market. This coin that is already algorithmically, whatever that means, is already prominent in the market space. Whatever.
Yeah.
Let's move on. Enough talking about CZ.
All right. Let's see here. It's your turn.
Yeah. SEC opens crypto ETF floodgates. No, that's not it. Kraken co-CEOs, $400 million whoops. My whoopsie.
Whoops.
Is this Bitcoin pizza competition?
I guess. I mean, Bitcoin Pizza was spending coins, but that was a very expensive pizza. This guy just lost his coins. He had a shit ton of coins on a laptop and then threw it away.
The co-CEO of Kraken?
Yeah.
Lost his coins.
Well, somebody was mining them back in the day, like in 2009, and said, hey, bro, here's my old laptop. There's a bunch of Bitcoin on it. Bitcoin didn't have a price back at the time. And he tossed it.
Wow.
And I guess
this is reminiscent of that other guy who's got the $1 billion laptop
the guy
in England, I think.
In England, his wife threw the laptop in the trash.
Oh, that's a nightmare.
Yeah.
I kind of feel bad for the guy in a weird way.
I think he's probably doing fine.
Yeah. I hate yeah.
Okay. Larry Fink.
You brought up cryptocurrency, and your personal belief around this or comments on this have certainly evolved over the years.
It did.
So tell our audience what you thought in the beginning, what you think today. What's BlackRock doing?
I didn't believe in it. Actually, in the early years, it was a domain of money launderers and thieves. Obviously, if you're at a corporation, you were held ransom with some type of code, you paid in Bitcoin. So
I can tell you this still happens today.
It still happens.
Every 6 months, one of our clients is business. Someone hacks it and wants Bitcoin as a ransom.
So I said that. I said in 2017 on a panel sitting next to Jamie Dimon, who Jamie still today is against it.
Very much so.
But right around 2021, around COVID, when I had a little more time on my hand, I started talking to a person who is a huge believer in it. So it was me. The one thing I was throughout my 49-year career, I'm still a student, and there are times I'm wrong. And so during this period of time, I brought in a bunch of different people, talked to them, learned more about it. And I remember one time I met this one woman who was providing illegal jobs for Afghani women. Women could not work, with the Taliban in control of Afghanistan, women are prohibited to work. And this woman was trying to find a way to empower and employ women in Afghanistan. The Taliban controls the banking system, so there's not a chance that she could pay them. But she started having them code
They were all coders. They were able to code for different companies out of Afghanistan, and they were being paid in Bitcoin. And so I started this journey of learning of different applications and why. And I studied why are people buying it. And much of it has to do with, and it gets back to our deficits, many people own Bitcoin because they're frightened of the debasement of their financial system, of their currency. Many people own Bitcoin because they're frightened of their security. 20% of all Bitcoin holders are Chinese. Okay, then I don't, so you own it. To me, Bitcoin is digital gold. You own gold for the same reason. But it's even more transportable because it's all, you have authenticated ID and then you have all this stuff and you could move it around. And so around 2023, 24, I became a real believer in it. And then we took a very active role. And we used to bring in all these different people who were big believers in it, like Michael Saylor from MicroStrategies. I mean, Michael came to our office when the stock was in the teens, but he was a huge believer in it, transformed his company. I mean, I could just say all these different people came in and talked. And then we became, we became a leader in working with the SEC and in trying to move forward in this. And fast forward now, a little more than 18 months when we first started creating a Bitcoin ETF. Today, IBIT is $86 billion.
Wow, that's remarkable.
Translation.
I don't think
the cat is out of the bag.
That was him giving Saylor a lot of credit.
No, it's not. But I mean,
and so I don't think that's Saylor from the inside moving, or reshaping Wall Street.
Mm-mm.
But I thought that was remarkably sort of humble.
Really?
At least on the learning part.
I thought that was all bullshit. I think it's all BS. I think the reality is the cat's out of the bag. Retail is figuring out.
Right. Well, he said, look, the people are interested in this thing. They want to buy it. Chinese people are buying it. China's buying it.
But what he's saying is
Saylor came in here when the stock was $15 and now it's $3,000. I'm like, what the fuck is that about?
No.
That's
what I'm getting
some sort of like
Cedric. What he's getting at is like, oh, I really learned that people were buying this because of debasement, and I had to figure this thing out. And give me a break.
Yeah,
bro.
no, not that.
You're the head of BlackRock. You know that you're taking advantage of that system. And you were happy
100%.
that retail didn't understand
100%.
the game.
I think it was more to he's like,
once
I don't understand this thing, but there's lots of other people who want it for different reasons. And it's going up in price.
That's not it at all.
Okay, maybe not.
What it is him saying, you know what? Cat's out of the bag. We better get on this program and start selling this stuff, because if not, we're going to miss out.
Yeah, that was interesting. I mean, he's a really good salesman then, and he's taking a different pitch than Jamie.
Yeah.
It's interesting he says Jamie Dimon is against him, and that's Jamie's public persona, but they're authorized participants in the ETF.
I think Jamie's more authentic about it. Jamie's saying, look, this disrupts the banking system. This is a threat.
Right, but Jamie still makes money off of the flows.
Sure.
The picks and shovels.
But the long-term view and agenda of Bitcoin is to take banks like that out of the way.
Sure.
And so I think Jamie's very honest that he doesn't like the threat.
He was like, Jamie's going to lie to your face. I'm
going to give you a story. Yeah, exactly. That's
that was great. That was cool. Okay. All right. SEC opens crypto ETF floodgates. Does approving generic listing standards herald a U.S. spot ETF boom?
Yes. And I'm going to give everybody a warning on this one. So this to me is Wall Street finally getting into the ICO boom, right? We all went through this in 2017 and watched it end badly.
ICO.
Yeah, we see it end badly in 2019.
That was exciting.
Everybody was, it's not Bitcoin, it's blockchain, and we're going to have all these different coins and all these different opportunities. And I'm not saying that nothing ever good is going to come out of crypto. Some good shit will come out of this in the long run. But in the meantime, this is Wall Street having missed their opportunity to legally participate in scraping profits out of retail. So now they're going to get all these ETFs approved. You're going to have Fartcoin ETF, and Dogecoin ETF, and all this garbage is coming to an ETF near you, so you can participate in speculative BS that has no value. The Wall Street will pump to you and sell to you.
It's just terrible, predatory. We got to move on. That's horrible. You can't have an ETF on a non-hard asset. It's kind of regarded.
ridiculous.
All right, let's move on.
All right, Bolivia unbans crypto and USDT surged. Bolivia's U-turn to embrace stablecoins. Is this a pragmatic response to dollar shortages or a slippery slope for an economy seeking stability? Sorry.
I think they're just trying to take advantage of all the activity in crypto, and they're seeing that their population wants it.
Yeah, I mean, look at these are the stats. So after officially lifting its crypto ban on June of this year, Bolivia saw crypto payments jump 630% in the first half of 2025 to 294 million. Now, major automakers like Toyota, BYD, and Yamaha are accepting USDT in Bolivia.
Yep. Mexico remains the region's crypto hub, with Bitcoin and USDT dominating cross-border remittances amid a 23% peso decline. Argentina, facing inflation above 100%,
Right.
has also turned to stablecoins as a hedge against financial volatility.
So why do you, if you have USDT,
yeah,
and your people are downloading the dollar on their apps, and now they're starting to use this currency, your currency is useless. Your central bank becomes useless.
But you have economic activity.
You either become an authoritarian regime and try and lock everybody down, or you're going to become the general manager of the US dollar bank account for your little region.
Is there even a third rail though? Like, I mean, so are those the two choices? And neither one of those.
Get your act.
I think if there's
otherwise you have to be like financially responsible and run your country conservatively and have a strong currency. That hasn't been like the agenda of most authoritarian rulers. So we'll see. It's going to be interesting.
I think that those are two good choices for the ruling class usually. So shame. All right, Ripple. Which one are we doing here? Ripple and Franklin tokenize a money fund.
No, you skipped over.
All right, TradFi dive deeper into crypto.
Yes, sorry.
With IG Group acquiring a crypto exchange, is traditional finance finally FOMOing in by sticking to the familiar terrain of exchanges?
Yeah, this is. I think this is going to be a big trend over the next few years. We saw NASDAQ invested in Gemini. We're seeing the SEC approve now the NASDAQ and other U.S. exchanges get into offering spot Bitcoin. I know JP Morgan and E-Trade, I think, just did a deal with Zero Hash to help facilitate spot trading on the exchange. So this is all starting to flesh itself out to become a bunch of M&A activity in the future. NASDAQ reported recently they're going to go to 24/5 trading, which means they're going to be trading 24 hours a day, which means they're going to be using stable coins and T0 settlement on these trades. So I think a lot of the big exchanges in the United States are going to look a lot more like Gemini and Coinbase in the future, and Gemini and Coinbase are going to start having tokenized securities, and it's going to become one big conglomerate as they start to merge and acquire. And I think some of the offshore markets are going to, offshore exchanges are going to get sucked into this as well.
Yeah, even Morgan Stanley, I think, invested in Zero Hash. They're all looking to get probably get into 24/5 trading. Let's move on to the next one.
The Bank of Italy sounds a stablecoin alarm. This is going to get so fun. So Italy's central bank wants stricter rules for multi-issuer stablecoins. Is this prudent risk management or the start of EU turf war over crypto oversight?
I think this is prudent management, and they're trying to figure out, how they want to play their hand in this. I think they're really concerned about if there's an issuer of a token that's a stable coin, and that's going into multiple economies in the EU. So each economy has or territory has their own rules and regulatory Does that put us back?
Are you there, Francis?
Yeah, we're back.
Oh,
okay. Well, it was epic. Whatever we were offline
We were
for,
awesome.
that was
That's
we've
too bad
ever
you guys
done.
missed it.
So I think we should just get into maybe the last. You want to go back?
I don't know, where did we lose you?
You guys were getting
Italy?
started on the Bank of Italy.
I think we
All
should
right.
go back to that one.
Okay. You want to go back to the Bank of Italy?
Yeah, sure.
Sure.
So
okay.
Italy's stricter, or central bank wants stricter rules for multi-issue stablecoins. Is this prudent risk management or start of the EU turf war over crypto oversight?
I think it's both. I think they are very concerned about coins emanating from one domain and entering multiple domains and not adhering to local regulatory environments, compliance. And I think they're worried about value being transferred and maybe not returned when warranted. So a consumer pays for something, they send 20 units of X, and that's worth Y. And when they want their return, they say, I don't like this good, or I didn't get it, I want to return my money. You know, is that issuer going to send them back 20 pesos?
Yeah.
You know, I think that's their concern.
I think
and then
that-
I think it's turf too.
Yeah, I think the big issue underlying all this, especially for like the Central Bank of Italy, is that when you buy a euro stablecoin, what is it backed by? Because there is no federal debt in the European Union. There's the debt of all the different countries. And so is it backed by just German debt because that's the cleanest dirty shirt? Or is it a balanced ratio of debt of
But this
all
would be on
the
like
EU
new
countries?
coins, right? Like Tether, can they use Tether in Europe? I mean, wouldn't they be using?
No, this
like,
would be for, I'm saying for a euro stablecoin.
right,
like,
okay. Oh, like a local,
like the Tether euro.
Sure, yeah.
Right. So, you know, in the United States, it's just, oh, well, we just buy the treasury, and that covers all 50 states. It's all federal debt. They don't have that in Europe. The euro is set up where every country still runs their own debt, and this currency floats on top of all this. So what do you back it with?
Right.
Whose debt? What ratios? And I think that's where these central banks are like kind of going like, whoa.
Well, they want to compete for the business too.
Yeah,
and the
I'm
issuance
sure.
rights.
I'm sure Italy's central bank would be like, yeah, it should be all our debt.
Right.
Just buy our debt, right? Don't buy Germany's
Backed
debt.
by Italy.
Right. So I think right, if you start to play this out long term, Europe breaks apart, the euro dissolves, and you're going to have stablecoin lira and stablecoin Deutschmark and all the currencies come back as stablecoin.
Fractal is, yeah, it'll fracture. We'll see.
We'll
All right,
see.
let's move on to the next one. Ripple and Franklin tokenize a money fund. Are tokenized money market funds the start of real TradFi and crypto convergence?
It is. We're going to see this. This is kind of like what we talked about with Eric. You're going to see stablecoins penetrate every part of the market. So Ripple is doing this with Franklin. Franklin's tokenized a bunch of other assets on blockchains, but they've done this so that their Ripple stablecoin can be embedded into this tokenized money market fund that is run by Franklin Templeton, and you can earn yield. So you can go back and forth between this money market fund with your stablecoin that doesn't pay yield, and then getting yield in the fund. And you're going to start to see this all over. You're also going to see stablecoins going into the traditional exchanges, right? This is any way possible to implement the stablecoin usage, bypass the Fed. The Treasury gets to sell those, Treasury Department gets to sell Treasury bills directly to the stablecoin issuers. And I think they're going to be looking for opportunities to embed this wherever possible.
Yeah, seems like it.
Yep.
All right, moving on.
Okay, the UK regulator floats crypto rule exemption. The UK FCA has proposed exempting registered crypto asset firms from certain principles for business. Advocates say it could make the UK more crypto-friendly post-Brexit, while critics warn against creating a two-tier regulatory regime that might weaken consumer protections. What do you think?
This reminds me of the red flag laws when I think Britain was kind of at the forefront, or pioneer of the automobile. And I don't know if you heard this, but the red flag laws come from, they wanted people to walk in front of the cars with red flags to make sure that the car didn't hit pedestrians. And it was all about like how to get used to this new technology was to protect the old sort of way of transit, which was the people walking. So cars never really got off the ground if you had to hire someone to walk in front of the car. And I think someone in the car had to wave a flag. It was something, you know, asinine like this. And I think that's how they've been with sort of Bitcoin and wider crypto adoption, if you will. We won't here, but it's funny what they're now doing to play catch up. So crypto firms in Britain could be exempted from some rules. What kind of rules? Rules that ensure financial service companies act with integrity and in the interest of customers under new proposals. So it's
so in other words, we're forked because the U.S. is going hard on crypto.
We're behind,
and we're screwed if we don't catch up.
Fuck it, like
rules are out. Go.
Rules are out. Go forward. We got to catch up.
We got to catch up.
So it's weird though. It's like because you put up all this stuff to kind of help, like do all this thing that you think you're going to do, and then you're like scratch that to zero.
Well, so really, what this means is we're trying to protect our traditional banking models and our proprietary interests within central banking of all this financial system. And now that we're losing the game, all rules are off. Let's go get the biggest crypto players we can.
Right.
Tell them
Prohibit those companies we just
we're protecting. And say, fuck it, you're losing.
Right.
Let's go hire the winning team.
Go catch up.
Yeah.
Good luck.
Good luck.
We won't bite you. All right, let's move on to the next one. India, #1 in adoption, stuck on sidelines. India leads the world in crypto adoption, but keeps policy in a gray zone. How long before pressure forces a decisive move one way or the other?
I don't know if India is feeling pressure to go one way or the other. I think India is trying to remain agnostic and neutral on many fronts, stuck there in between Russia and China and the United States and everything that's going on. I think they'll stay in the gray area for some time, but as long as they're not ruling through enforcement like Gensler did in the United States, that adoption will continue.
Right.
And this is the programming and development center of the world. They have many, as Balaji says, many gods, many currencies, many beliefs. It's the melting pot of cultures there. So I think it'll continue.
Didn't they miss out though when like sort of society chose gold over silver, or the world did, and they kind of set their. I
mean, gold's a big part of India's culture too.
I think
China, it's just everything. I think India is very open to duplicity.
All right,
so it's
we'll
all
see how
good.
it plays out. All right. Well, this is BitcoinCenter #21 live stream brought to you by Byte Federal. Go bank yourself. Point of sale, crypto wallet, and the ATM. Buy that Bitcoin, put it in self-custody. Francis, we have any Q&A, any chats, any comments in the chat?
Nothing this week.
Right, well, if you're enjoying the show, hit like and subscribe, and we'll roll out here.
Thank you all for watching.
My
See you
name's
next
Cedric
week.
Youngelman. This is
Paul Tarantino.
See you next week, Tuesdays at 8 p.m.